Good evening, everyone, and welcome to this meeting of Gravesham Borough Council's Finance and Audit Committee. I intend to go through some housekeeping matters. This meeting is being live streamed via YouTube and recorded. The recording will be uploaded to YouTube within 2 working days, where it can be accessed by everyone. Members, please use the microphone in front of you when speaking and ensure you turn your microphone off once you have finished speaking. Another member or officer will not be able to speak if your microphone is still on. Please note that the Council's visual equipment may, on some occasions, focus on or near to the public gallery area. Therefore, those in attendance at this meeting may be filmed or recorded. Attendance at this meeting signifies your agreement to this. If, as a member of the public, you do not wish to be filmed or recorded, please inform a Council staff member in attendance and we will try to assist where reasonably possible. On hearing the fire alarm, we ask all attendees to immediately evacuate the building. Please evacuate by the nearest fire exits and make your way to the community square outside of the main reception doors. Cool, thank you. Right, welcome everybody. The first order of business is the apologies for absence.
Yes, Chair, we've received apologies from Councillor Samir Jassal, Councillor Alan Metcalfe substituting, and I'm understood that Councillor King may be running a little bit late.
Cool. Lovely, thank you. Welcome, Alan. The next order of business is to sign the minutes of the previous meeting. Do we all approve? Okay, thank you, everyone. Item 4 is to declare any interest members may have in the items contained on this agenda. When declaring an interest, a member must state what their interest is. No. And item 5 is to consider whether any items in part A of the agenda should be considered in private or any items in part B in public. I don't believe there are any. No? Okay, thank you. Okay, on to item 6, which is the finalised audit plan for 24-25, and I'll hand over to Jasmine.
Thank you, Chair. This is the finalised external audit plan for 24-25. Previously, we brought to Finance and Audit Committee for approval our indicative audit plan. It was indicative for 2 reasons. One being that the 23-24 financial statements were sort of open for audit at that time. And secondly, just to conclude some of the risk assessment processes, including our assessment of IFRS 16. If I could draw your attention to page 19 of the agenda pack, where we have outlined a summary of the changes that have taken place within our audit plan since the indicative audit plan was shared with yourselves. The 3 key changes I will outline include a revision of materiality. This is to take into account the increased gross expenditure published in your 24-25 draft financial statements. Secondly, it is to reflect on IFRS 16 and concluding that our risk assessment is that this balance is a significant risk for our audit procedures. This was following receipt of management's working papers and evaluation of management's work in light of the new accounting standard and evaluating the risk of material misstatement of that balance. Work in that area is well progressed and it is defined sort of the procedures that we'll perform on that balance during our field work within this audit plan. Our third addition within this final audit plan is just in relation to our independence considerations. During August 2025, we were engaged by management to prepare the Social Housing Decarbonisation Fund Assurance Report for central government. So we've just reflected that in the non-audit fees section and our independence section of this report. Thank you. I'm happy to take comments there.
Cool. Thank you, Jasmine. Any questions? I've got a couple, if you wouldn't mind, please, Jasmine. Can you just talk about the IFRS 16? I know we talked about it a couple of committees now. Can you just clarify why it's treated as a sort of a significant risk? And then I guess what you referred to the management working paper on leases. What was it about that sort of bumped it up to severe risk rather than sort of another risk?
Happy to help clarify on that one. So for IFRS 16, as it's a newly implemented accounting standard for local authorities, the primary risk for us is in relation to completeness of management's workings, and in particular for IFRS 16, the leases that are deemed to be in scope to have a change in classification. Previously, they would have been held as sort of normal leases or as sort of finance assets, but now they'd be treated as right of use assets with an associated lease liability. So is it really in relation to that completeness risk where we focus our attention in looking at management's working paper? In that review of the working paper, there was appropriate levels of detail for that report. However, some of the technical accounting aspects of which assets or leases should or shouldn't be included, we have raised inquiries with management on. So the reason that we had raised this as a significant risk was just because going into this audit, we know that there is likely to be a material adjustment to the right of use assets after including a couple of the assets into the scope of IFRS 16. It's going to be a classification change from assets within assets on the balance sheet. It's not a major change, but the definition of a significant risk under the auditing standards is there's a sort of significant risk of material misstatement. So it'd be perverse for us as auditors to not raise this as a significant risk, sort of going into the audit knowing there may be a material change to this balance in light of just applying the accounting standard there. Hopefully that helps to clarify.
Yeah, that makes sense. So there's a risk of potential material change, but actually there may not be no change whatsoever.
Yeah, so we're going through the sort of technical accounting standards back and forth at the moment, so whether there's going to be a change in the financial statements. Our view as auditors is it's likely to be a change based off of the sort of pieces of IFRS 16 that we've drawn on as sort of extracts of why a certain approach would need to be followed in implementing that. But like I say, it's going to be a movement within assets really. So it's not a significant change on the face of your balance sheet, but it's sort of going into this audit work for completeness. We know currently they're being excluded. They perhaps should be included, and those assets are material.
Okay, thank you. Any further comments or questions? Lee?
Just a brief question. Does this mean we've now caught up with all the audits?
Happy to take this one when I go on to the progress report, which has a little bit more about regaining assurance and what we're doing on 24/5. But as a whole, we have caught up. We are now just talking about 24/5 in this meeting, as opposed to sort of previous financial years.
So I assure you going to come back to this, but we seem to have had an awful lot of audits from previous years. Is this the end? Please.
I wish I had the answer for you. Unfortunately, we're in a phase of building back assurance. We don't yet have assurance over the opening balances of the authority, and there's sort of I'll find the slide for you and I'll point out when I get to the progress report, but there's a series of processes that we're going to need to follow over the coming years to sort of regain some of that position, primarily in relation to your reserves, because obviously those historic transactions that were subject to no audit procedures and received disclaimed opinions, obviously they still have a lasting impact on your reserves position that we will need to regain assurance on.
But I think we can reflect that there's going to be one audit a year from now on, though. So the historical study's done one per year, and then we'll just, yeah. Thank you. Was there anything else on that paper, Jasmine? Are you happy to pop on to the next paper? Thank you.
So on to the progress report. So if I first start by drawing attention to page 79 of the agenda pack. So we received the 24/25 draft financial statements on the 10th of July this year, and we have commenced the 24/25 audit procedures. This included a review of the accounts by myself and Paris, the engagement lead, and comments are currently with management for consideration and for amendments to the financial statements as deemed necessary. We have been sort of eager to get involved within the audit procedures and ahead of our visit during October to December that was planned and outlined in our audit plan this year. We also visited during July and August to preemptively select some of the samples and look at the material balances for the council with a primary focus on your income and expenditure arrangements, sort of bring ahead any assurance that we can, provide guidance to the council and give the ample time to sort of rebuild that assurance and get the appropriate evidence in place. Management engaged with that process really well. We have a very good working relationship in terms of building back as much assurance as we can for your upcoming audit findings report on 24/25, which will be in February 2026, that we share that with yourselves at Finance and Audit Committee. And we will continue our fieldwork phase of the audit, as I said, during October to December this year. There is a Finance and Audit Committee planned for November. At that meeting, we will bring your auditor's annual report, And we will also share an update on how the financial statements audit is going for yourselves as well. With regards to the sort of the sampling and the progress that we've made to date on 24-25, I can also draw your attention to page 88 of the agenda pack, which there's an appendix there which outlines sort of a more detailed level of what we have managed to review within the financial statements and the progress that has been made. With regards to Councillor Croxton's question on rebuilding assurance, so section 2 of the report, which is from page 83 onwards, outlines the sort of the national rebuilding assurance agenda set by central government, and the sort of the ideas and thoughts in place by the National Audit Office on how we may gain assurance in future years. And this is helpfully supported by sort of a RAG rated traffic light graph on page 87, which shows what the plan ahead is on where we may be able to gain assurance for yourselves over the coming years. As alluded to, the reserves position is particularly challenging for us to rebuild assurance because of the lasting impact of the unaudited periods, and therefore there is currently discussion sort of within the wider sector as to how we reflect on that. But our intention at the moment is to get full assurance over your I&E procedures during 24-25, and also where possible the closing balances of the balance sheet as well, primarily for things like debtors and creditors, which obviously have a sort of a lasting impact as well. And yeah, happy to take any questions there, either on audit progress to date or on rebuilding assurance.
Cool, thank you. Any questions? Actually, I'll say thank you for the chart on actually page 87. That's really useful. Actually, I think it's quite useful to get a good understanding of the next couple of years. I just wanted to ask you about the audit sampling tracker. Is this normal in terms of the number of like red items? Given this, I guess you're almost like preemptively asking for things to get ready for when the work starts. So at this stage in the process of, I guess, of collection of materials, is this kind of normal RAG?
That's a fair question. So for all of our audits that are starting in October for that 3-month window, we did offer this sort of period of sort of pre-selection, and we went into that expecting all samples on this list to have been selected. However, going into the arrangements for Gravesham, we knew that this was quite a unique period for management, being that they hadn't had some of the questions and they asked for listings, etc., for quite some years. So we knew that things may be a little bit more challenging and may perhaps need a little bit of time. So we worked quite closely with management to get as much as we could done during that period. And even following that period, members of the audit team also continued to visit management to support in getting a little bit further ahead where we could. But yeah, we would like to have perhaps progressed further, but I think overall we're in a really good position amongst your peers.
Thank you.
Thank you, Chair. Just to give some reassurance to the committee that the audit sampling tracker is part of the audit, that we need to ensure that we provide certain evidence so that they can undertake the sampling. There's also other things that we've been requested to do, and I had a quick look before committee just to see exactly where we were. So there've been 109 requests for information. Of those 109, there are 7 where no further action is required for us to provide. 58% we've provided information, so it's now with Grant Thornton. There's 32% which is still with ourselves that we're working on, and there's 4 that we need to start looking at we haven't looked at yet. So I hope that gives some sort of reassurance that, you know, the RAG rating doesn't really, I don't think it quite conveys precisely how much work has already been undertaken, bearing in mind that the audit is due to start in October and we're currently in September.
Thank you, Pat. Lee?
So, I mean, I'm a bear of little brain. I'm looking at these figures. I assume I should be worried when I see red figures. Can I just ask, should I be worried about the reserves which seem to be permanently red? Oh, sorry, quite right.
Right. Regarding reserves and the regaining assurance slide, I don't think you should be particularly worried at this stage. There are many other local authorities in the same position where they received disclaimed opinions in the past, and that means they're also on a path to rebuild assurance. I think there is likely to be some sort of government override, but the scope and the scale of work on that is yet to be determined. I think at the moment there's not much more that we can do than wait for guidance, so I wouldn't be particularly worried. I think what will be reassuring for yourselves is as we present the audit findings report for 24-25 next year, that will give a degree of assurance around things like processes and controls for the local authority, which may help give you a view as to sort of the procedures that were in place during those unaudited years, and may give you a level of assurance as to sort of the degree of risk on sort of those reserves in that interim period. However, there's nothing I'd like to bring to your attention at this time that I'm aware of, which would sort of indicate a misstatement on those balances or the reserves brought forward. So hopefully that helps to clarify the process there.
Chair, so I can sleep easy in my bed tonight, can I?
Cool. Thank you. Any further questions or comments for Jasmine? No. Okay. Thank you. Right. Both those papers for noting. So thank you very much. On to item 8, which is the General Fund Budget Monitoring Report, where I dare say we may speak about reserves again. I'll pass to you, Gary, to present.
Thank you, Chair. Beginning on page 97 of the report pack, this is the General Fund Q1 Budget Monitoring Report, which looks at the period up to the end of June 25. In addition to noting the report, it also seeks approval of capital-related budget increases of 3 externally grant-funded schemes. One is the addition of a disabled facilities grant, which is worth 335k, which can be found at section 7.17. The second is an increase to the Brookvale PV panel scheme set out on section 7.21 worth 85k, and the third is the addition of the Warm Homes programme set out in section 7.23 worth 950k over 3 years. These 3 items were improved by Cabinet earlier in the month. Starting with the summary table at section 3.1.2 on page 100, you will see a projected favourable variance for the year of 257,000, which can be grouped into 3 main areas. Firstly, there's a 200k worth of savings as a result of balancing the budget initiatives. This is made up of a 50k removal of annual contributions to the Planning Policy Reserve, a 35k increase in expected income relating to changes to disabled parking charges, 35k reduction in annual contributions to the election reserve, £32,000 increase in rental income relating to the relocation of the probation service and Citizens Advice Bureau, and finally a 20k reduction in expenditure relating to the deletion of a post within revenues and benefits. The second main area relates to additional income we're expecting relating to the Rutan Road temporary accommodation scheme, which is worth 100k for the year. And thirdly, these positive variances have been partially offset by approved revenue carry forwards, which are worth 44k. These have been brought forward from the previous year, details of which can be found at section 3.4.3. Moving on, the summary position of working balances can be found at the table at paragraph 6.1 on page 105. And this shows a end of the year position of just under 2.8 million. This includes the minimum general fund working balance of 2 million, plus a balance on the additional general fund reserve of 0.8 million. The overall reserve at the end of the year is therefore expected to fall below the recommended level of 3.25 million, albeit by a lesser amount than we expected at budget setting in February. The medium-term financial plan, which can be found at Appendix 1, shows that working balances, excluding the 2 million minimum reserve, will be extinguished during the 27 to 28 financial year. This was previously forecast to occur during the 26-27 year as part of budget setting. The table at 6.2, page 106, sets out movements in the general fund earmarked reserves for the year, which indicates a net decrease of 1.9 million, with an end of year position expected to be around £12 million. And lastly, in the report, moving to capital at section 7, the table there sets out the general fund capital programme with expenditure for the year currently amounting to 6.4 million compared to a total working budget of 39.5 million. The key projects here being the charter at 22.7 million and the new leisure centre at 7.1 million. Happy to take any questions.
Cool. Thank you, Gary. Is there any questions? Derek?
Yeah, thank you, Chair. Apologies, I did ask this question at the pre-meet, but Gary mentioned the page 105, 6.1, page 118. When you go to 26, 27, the balance is zero balances. So I think we've got to adjust that or look at it. Thank you.
The balances were budgeted through to effectively run out during the 26-27 financial year as part of budget setting. So a lot of the work that's been currently done around balancing the budget is gradually closing that gap. So this year we've been able to bring that forward by year. So give us an extra year's breathing space, if you like. The actual budget gap, which was expected to be 2.6 million at the time, is now reduced to 1.9, and with an extra year on top of that. So there's still work to be done, but it's better than it was.
Cool. Lee?
Yes, a couple of questions if I can. Back to, I'll get to it in a minute. Right, 343. Parking services, 20k. No, that's not the one I'm looking at. I apologise, Chair. There was a variance that I couldn't understand what was favourable or adverse, so I'll find in a minute. Can I then come to my second point, which is the Ruton Road, 100,000, sorry, K favourable variance. Can I just have that explained to me? Why is it such a large sum of money and so favourable? Oh, sorry.
Thank you. So the Ruton Road is a general fund asset which is managed by the HRA. So any surplus at the end of the year comes back to the general fund. I think partly the 100k relates to a budgeting error that was made. But I also believe you might have to help with this, Alex, but I think the service charge element of that accommodation is increased higher than we expected. So I think there's two elements to why that's 100k for this year.
Let's come back. So it's 100k, which did you say budgeting error?
So the costs for Ruton Road are initially incurred in the HRA budget, as is the income is received into the HRA budget because it runs through the rent system. And then we take into account, because obviously there's repair costs as and when tenants move in and out of those units within the property. And on the HRA, when the property was purchased, we set up the initial budget, but as we've moved on a couple of years, we've worked out, we've seen how the income flows through it and how things have changed. So we've reflected it within the HRA's budget. Unfortunately, it hasn't been reflected on the general fund in the same consistency. So that there was this difference between the two. So this is just making up that difference now.
Thank you. I just return to 5.5, the 1.89 million of potential savings. On the sort of spectrum of kind of like prudent to quite stretching, I mean, how realistic are those savings? Sort of how robust are the plans that are in place right now?
In regard to the 1.9 million, yeah, I mean, I believe the plans that sit behind these targets have been established for a while, and I think they're changing quite regularly, but they go through a regular review once a month from the management team. So they are as robust as we can tell at any given point. Obviously, things are continually monitored. We're not in a position to actually bank any of these savings till we've got a high degree of certainty as what they are. But they are a best guess. But as I say, they are monitored very, very regularly.
Okay, thank you, Gary. And I believe the next question is probably going to be for Alex, which is at 7.2 of the Treasury indicators. At the bottom of page 113, so 7.2, the general fund, where we're looking at the budgeted figure of 26% ratio of financing to revenue, can you just give us a bit of a flavour of what's driving that number, please?
Yes, sure. So in terms of the budget, when we say the budget, that's what's in the was reflected in the Treasury Management Strategy rather than in the budget. And members might remember this is one of the indicators that we've been trying to grapple with over a number of months as to what is the best way to demonstrate the actual costs in terms of the revenue income. But what we've done in terms of the June figures is take into account the long-term debtor on Rocherville, so for the charter. So the general fund borrows an onward lends to Rocherville for the charter, and then those costs are then due back from Rocherville to the council. So effectively, we have reflected that now in the June figures. So that's why there's a discrepancy between the two. But you'll notice from March to June, there is quite a sizable shift. And I've had a quick look at it earlier today just to make sure that I was clear as to why that's moving. And there's a number of things that are happening within those figures. So in terms of the cost of borrowing, there's actually a lower cost of borrowing because we're now reflecting that money back in from Rocherville for that interest cost. However, it also takes into account the investment income that we generate on our Treasury management investments. Because the interest rates are going down, we're now forecasting a lower amount of investment income compared to what we had last year. You'll also recall that we've done an MRP review, or Link did an MRP review for us last year, and that reflected a big saving in MRP costs for 24-25. However, now we have to incur those costs going forward from 25-26, so that has increased the base costs in there as well. So there's a number of things happening within that, but that is hopefully a better position and a better, more reflective, should I say, of where we actually are.
That's lovely. Thank you, Alex. Any further questions for Gary or Alex on this paper? Okay, sorry, Pat.
Thank you, Chair. If I may just follow up actually from Gary, what Gary was saying about the budget gap that we've got. Again, I think just to try and give some reassurance, we as an authority have got history now on delivering closing budget gaps, and since February 2016 we've now delivered £9.2 million worth of savings, and in the last 3 years it's 1.4 million in February 23 that we had actually delivered, 1.9 million in February 24 that we delivered in that year, and in February 25 1.7 million that we delivered. We've already shown, and what we're trying to do is to be more transparent in the report. So you will notice it will be something new to you that we've started to detail those items that we have delivered in Q1, and we will be continuing that as we want to be more transparent. That's come from Grant Thornton advice. It's come out of our recent peer challenge as well, that we need to share this with members and to be more open. We do not put aspirational savings into our build, which some authorities may do, to close that budget gap, but we will only put it into our plan once we are assured that they are monies that we can deliver. So there's still is 1.8 million that we need to deliver. We appreciate we need to deliver that quickly, and that's why we want to report this more openly to this committee on a quarterly basis. So thank you, Chair. I just wanted to add that in. Thank you.
Yep, no, I appreciate that. Thank you, Pat. I think we've been reassured as well over the sort of last few years that what we're doing really is optimising how we deliver the services rather than cutting services to residents as well. Okay, so the next paper is paper 9, which is the HRA monitoring report, which I'm passing to Alex for.
Thank you, Chair. So the HRA budget monitoring report for Q1 starts on page 119 of the agenda pack, and there's the usual short executive summary on page 120. So as at 30th of June, there's a forecast overspend of £417,000, as can be seen in the table 1, which is at paragraph 3.2 of the report. This includes a planned overspend of £149,000, which relates to expenditure that's been identified subsequently to the budget being approved in February, but this will be matched from a contribution from the HRA Priority Reserve. The remaining £417,000 will need to be met from the HRA's General Reserve unless it can be determined whether this can be offset within the existing budget envelope. The main contributing factor to this position is a forecast shortfall in rental and service charge income. At budget setting, it was assumed that the purchase of Crescent House would have been completed in 24-25 and generating rental income in the current year. Purchase of this property has not yet been completed and therefore has resulted in a forecast adverse variance of £253,000. In previous years, there's been a significant adverse variance on repairs and maintenance. Significant efforts been made at budget setting to ensure that the budgets were set at an appropriate level to meet the demands of the service as it responds to continued significant demands, including damp and mould, the new consumer standards which have been introduced, and government's commitment to improving social housing. Therefore, it's pleasing to report that at Q1 there is only a small favourable variance of just £4,000 against repairs and maintenance. However, we're continuing to work closely with housing officers to identify any issues or concerns at the earliest opportunity. There's also an overall nil variance on capital finance, but within this budget heading there are some significant variances. External grant monies from Social Housing Decarbonisation Fund and the Local Authority Housing Fund. These grants were not known about at budget setting and therefore generate a combined favourable variance of £1.5 million. In addition, it's anticipated that the council will be reimbursed by £1.2 million from its insurers Zurich to cover the cost of repairs at Rose Street following the fire in August 2023. These two favourable variances are then matched by an equal and adverse variance as a result of applying this income to finance expenditure within the capital programme. Based on the variances identified at the end of Q1, the HRA is anticipated to retain its £3 million working balance, and the HRA General Reserve balance is expected to reduce to 1.34 from its opening position of 1.75 million. And the HRA Priority Reserve will be reduced from 500,000 to 351,000. Turning to capital, and in particular Table 4 on page 126, spend and commitments as at the end of June is just over 16.3 million, with a forecast spend for the year being 33.8 million. Details of progress made by the schemes in capital programme can be found in paragraph 4.4, page 127 onwards. I'm happy to take any questions.
That's great. Thank you, Alex. Any questions? Josephine?
Thank you, Chair. I'll break mine up if that's okay, Chair. So regarding the HRA part, I wanted to ask, given the pressures, do we expect HRA reserves to fall below sustainable levels this year? And what if we do have, if we have seen, what corrective actions are being explored for that? And then regarding the cost of financing, by deferring out to future years, does this impact the Treasury management strategy that we have in place at the moment? And then I'll come back if that's okay.
Thank you. In terms of the use of the balances and reserves, so the table at 3.14.1, so we have a minimum working balance of £3 million for the HRA, and within the budget papers that is set out how we come up with that £3 million. We are not required, as the forecast is at the moment, we're not required to dip into that, but we are using our HRA general reserve, and that will be coming down, as I said, from 1.75 to 1.3 million. Once that HRA general reserve is gone, it's like the general fund. Once it's gone, it's gone. It's not there to, we can't top it up unless we generate surpluses in future years. So we are using some of it this year. So there will be some left of that, but as I said, it's going down. In terms of the cost of borrowing, we're trying to look at it as a whole authorities programme rather than just focusing on the HRA. So when we have borrowing decisions, we need to look at what we need as an overall authority. However, the HRA has got access to competitive rates from the PWLB. There's discounted rates for the PWLB at the moment. So whilst we, in terms of general fund, we might only be borrowing for 1 or 2 years, with the HRA, we can push it out slightly longer and benefit from slightly lower rates because we're getting that discount. It gives us some certainty in terms of the cost of those borrowings, so we know what we're committed to rather than having to keep refinance every year and having to just keep forecasting where the costs are.
Perfect. Thank you, Alex. And so I just wanted to then move on to the Housing Capital Programme and Right to Buy receipts, if that's okay. And I just wanted to ask whether we're confident we can meet the strict spending deadlines and what the risks are of having to return receipts if this kind of slips through the cracks. Thank you.
I think this year, particularly, we're not going to have any problems spending the receipts because of the changes in government policy. I think the issue will be that we won't be generating those receipts to be able to spend in the first place because we won't be selling as many council properties. So that's where the receipt comes from when we sell a property. So we will see a decline in those properties. So we will see less receipts coming through. They've got quite an active programme at the moment. There's quite a lot of developments on site as well. I think when we've come previously, we've had a number of sites kind of in the pipeline, but this year they are actually on site on a number of schemes. So, and they are all progressing as set out in the report. So.
Thank you. Any further questions? I just have one actually, Alex. On 3.7, repairs and maintenance. I mean, this is one that the committee has talked about quite a lot over the last couple of years. But this is the first time that this has been favourable. I'm conscious we've increased the budget to match previous sort of overspends, but I guess in 3.7.2, I think the narrative, though, although the numbers are favourable, the narrative is still consistent with previous years in the fact that we're having fewer internal contractors on the books, so we are relying on external resource to do that. So, I mean, I guess the underlying conditions are still the same, but I think that we've recognised that we're going to need to spend more in this area. Is that correct?
Yeah, there are still the same levels of demand for the service. They are still having the same pressures of trying to retain staff. And where they can't retain staff, there is a reliance on those external contractors. They are trying to use Rocherville repairs as well, where they can, to try and keep that money essentially within the council. So they are attacking it from a number of directions to try and mitigate it. But as you said, we have rebased the budget. Because the service demands have changed so much significantly over the last few years, those budgets were very historic and really did need a radical overhaul. So we work quite closely with the service to try and set them at an adequate level as well. So it seems to be paying off at the moment, but we'll find out more in Q2.
Lovely, thank you. Lee?
Just coming back to 2.1. So at the end of Q1, expenditure exceeds income by 417,000. Is that sustainable in the short or long term?
The most significant reason for the overspend this year is the fact that it's a shortfall in the rents. That's really the main driver of it. And when we set the budget, we assumed that we would be buying Crescent House last year. So that contributed to, I think it was 19 units. So if they would have been purchased in 24, they would have been fully occupied for the whole of the year. So we're nearly 6 months in and that property has still not been purchased. So it is going to cause a problem this year. We have got the money within the reserves to finance that shortfall. There is we still don't know when that property is going to be purchased. When we come to do budget setting for next year, if that property hasn't been purchased, we'll have to make a decision whether we include that in the rents at that point, or whether we no, we won't include it until it's been purchased, and then we might get a benefit of it if we don't include it. But we'll obviously take that decision with Sarah and housing as to where we are in that purchase process.
Could I just explore that a little more? So what we're saying is we have properties that are vacant, but we're not generating income on, and that may be an ongoing problem.
So we assume that we would purchase Crescent House. We haven't purchased Crescent House, so we can't use it. We can't generate rent from it. So because we haven't got that rental income coming into our budget, that's where we've got a shortfall. So we don't have vacant units because we don't have them at the moment, but the budget assumed that we would have them and they would be fully occupied.
Cool. Thank you. Any further questions for Alex? No? Okay, thank you. That paper was for noting. So duly noted, and we'll move on to item 10, which is the internal audit progress report, which I'll pass to James for.
Thank you, Chair. Yes, the report at Appendix 1 is the first update on progress for 2025-26, detailing the work of the team from the 1st of April to 31st of July, and focusing on the plan for Q1, Q2. Section 4 on page 145 of your pack shows how our resources have been used over the period, and also details the fact we are projecting a loss of approximately 25 days from the resources projected to be available at the start of the year. Full details of the reviews from 2024-25 that have been finalised since our last report to the committee and progress against the current year plan can be found in the tables at section 5, starting on page 146. The tables starting on page 149 detail the other assurance and consultancy activity that has been undertaken by internal audit. We've introduced a new section to report on themes and root causes identified across multiple audits, but at this stage there hasn't been a sufficient number of reviews finalised to enable a suitable analysis. So we're hoping to have something more on that in the future. An update against the team's key performance indicators for this reporting period is provided at section 7 of the report, which starts on page 151. As of today, I can tell you that for IA3, the proportion of agreed assurance assignments delivered is now 16%, and the proportion of assignments underway is now 21%. Section 8 details a review of the plan, and we have addressed the resource losses as part of the process for developing the Q3-4 plan, which is the next item on your agenda. Finally, section 9 of the report provides an update in relation to all agreed actions in the table commencing on page 152, and members will note that all actions due up to 31st of July have been completed. I'm happy to take any questions members may have.
Cool. Derek?
Yes, just one quick one. On page 148, reference 21, you're talking about Woodville and St George's Arts Centre. Fieldwork complete, awaiting supervisory review. What is a supervisory review and when will it be complete?
Yeah, so the auditor completes the fieldwork. It's then subject to a quality assurance check by the manager before it proceeds to have the final stages and a draft report prepared. But essentially everything we do is subject to a quality check before it goes out to ensure accuracy and make sure everything's okay.
Thank you. Any further questions, Lee?
Yes, can I just ask about reference 1, homelessness? Can we have any sort of figures or summary? I assume this is going to be a long ongoing problem for us.
I'm afraid I've got no figures for you. That review, although it was part of the 24-25 plan, obviously we added some significant resourcing issues last year. It wasn't actually started until very late in March. Obviously with the work we've also got for this year, there's been some slight delays. I'm hoping that will be completed very soon. If not already, I'll have to check on the progress tonight. But yes, obviously, homelessness will remain probably a high risk area. Obviously, temporary accommodation is one of the biggest financial pressures on the council. What we're trying to do with this is provide assurance that although it's a risk, the relevant controls are in place. So obviously, as that progresses, the committee will get the outcomes of that review.
Could I just push a little more on this one? I can understand everything is in place for this, but I would like to know something about the scale of this issue for various other reasons as well. But I assume it's ongoing, but you're saying it's under control, but we don't have any figures.
I'm not able to say a lot at this stage because obviously the review itself is still taking place. So I've not had sight of it. I won't see it until the review itself is completed. It's in progress at the moment. Once the field work is completed, like every other review, it will be subject to a supervisory check to make sure everything's been covered. We'll then prepare draft reports that are agreed by the service, and then a final report will come out on that. It's at that point, once everything's been checked and agreed and we know where we are, that's where we'll be able to say what assurance we can provide over it, and it'll also give you more detail of what we've looked at and what we've identified. To say at the moment, the work's still happening, so I couldn't tell you anything in detail at the moment.
Chair, a very quick question. So when the report is put together, where does it go? Does it come here? Or does it go to Cabinet?
You will receive the executives, as with all other completed reviews, the summary will be in the appropriate update report that follows. Obviously, the final reports do go to the service. They also go to the chief executive, so it is shared more widely. And as I say, the committee will get it will be included in our updates once it's done.
Thank you. Just one question, James. On item 6 in the same table around council tax discounts, disregards and exemptions, and the comment says that improvements are needed in the administration of DDE reviews and there's a high priority action. Given that we talk about this quite a lot in counter fraud and the fraud risk register, I mean, are we assured that the high priority item and the improvements that are needed, we're still fairly robust in picking up any chance of fraud in that area?
Yeah, obviously there are a lot of the majority of the controls in place are aimed at identifying fraud and error before it gets into the system. So the actions relate to finalising procedure notes and enhancing arrangements for reviews. So I think it may be there may have been resourcing issues in terms of carrying out reviews. The procedure notes are obviously necessary to make sure that all staff are following the same process. So yeah, I mean, fraud is always going to be a risk, particularly in this area. Obviously, by carrying out those reviews, we're going to pick up on things a bit sooner.
Okay, thank you. Any further questions on this paper? No? Okay, that was for noting. Move on to item 11, which is the internal audit plan, which is for approval. So back to you again, James.
Thank you. Yes, the proposed plan for Q3, Q4 is presented at Appendix 1 and starts on page 159, although the reviews themselves are listed in the tables commencing on page 163. Our risk assessment was refreshed in July, along with updates to the level of resource expected to be available and the draft plan prepared. Overall, the number of reviews producing a formal opinion predicted to be undertaken during the year has remained the same. To address the resource losses, we've amended the allowances for other work to compensate. The plan itself continues to be focused on the highest areas of risk to provide the necessary assurance to the council. And as with the plan for Q1, 2, each review has been assigned an indicative figure of 15 days for planning purposes, but the internal audit manager will have freedom to reduce or increase the allocated budget to ensure the review provides the right level of assurance. I'm seeking the committee's approval for the proposed plan, and I'm happy to take any questions.
Thank you, James. Any questions? So it seems pretty sensible. Do I have the committee's approval? Yep, Thank you. You have your approval, James. The next item is the Counter Fraud Progress Report.
Thank you, Chair. As with internal audit, the report at Appendix 1 is the first update on progress against the current year's plan, detailing the work of the fraud team for the 1st of April to 31st of July. Section 3, starting on page 172 of your pack, shows how resources have been used over the period, detailing the level of time spent on each of the key areas outlined in the plan. Now, the tables in Section 4, commencing on page 174, provide an overview of the work undertaken in each of the areas in the plan. For fraud awareness and prevention, there has been some service-specific awareness sessions, and we've been working with HR to set up some manager sessions, the first of which is later this month. We are now looking at digital solutions to increase our reach across the organisation for fraud awareness. In terms of proactive counter-fraud activity, the NFI exercises have been progressing, and the committee will receive their annual report on that activity in November. We've been continuing to look at right to buys, and have also started to work with housing on verifying succession applications, which has actually resulted in the recovery of a property. The table on page 175 shows the summary of results from external investigations and the associated savings. There's also a brief summary of other counter-fraud activity in the table on page 176. An update against the team's key performance indicators for this reporting period is provided at section 5 of the report, which is on page 177. Now, 165 investigations were concluded in the period with associated cashable savings of 197,867 and notional savings of 93,000 linked to the property recovery I just mentioned. I'm happy to take any questions members may have.
Thank you. Any questions? I just have one actually, James. Just on, I guess the table on fire performance monitoring indicates that proactive counter fraud activities 12.6% at the time, and versus 74% of responses. But in the tables in the previous couple of slides, it would seem that proactive counter fraud activity is still quite a good return. So I just wondered how you balance those two items off and the balance of the time spent on each.
Yeah, so the proactive element of a lot of that work, the actual reviewing of the data matches themselves, that's the proactive element. We're looking into that. If things progress to an actual investigation, which is obviously where the results then come from, that's coded under the reactive time. So they're actually investigating something. The proactive stuff is about identifying that potential fraud. Obviously, I do need to check some of the work that to make sure some of the work we've been doing in terms of validating right to buy applications and succession applications. Obviously, sometimes the officers will code it as investigative rather than proactive. So I will be double checking whether that's all in place. But obviously, you will see a difference because the proactive work is designed to identify the cases for investigation. If we've already got a number of, the most investigations that we can realistically cope with, we're not going to go looking for more at that point. We need to clear some before we can then generate that additional work. But obviously, we've got the proactive stuff always on the agenda to try and move things forward, and we do various things. We've got some stuff coming up across the county in the not too distant future as well.
Lovely, thank you. Any further questions on the paper? No? Okay, so we'll move on to the Counter Fraud and Corruption Strategy, where we'll be asked to endorse the strategy. So I'll pass to James to present.
Thank you. Yes, the Counter Fraud and Corruption Strategy is subject to annual review, and this year there have been significant changes, although these changes are more about the appearance of the document rather than the key message in its content. In hindsight, it may have been advisable to include a copy of the previous version for comparison purposes, but it is available on the council website still if members want to have a look at the old version. Now, the new Economic Crime and Corporate Transparency Act introduces a new offence of failing to prevent fraud. An organisation's only defence is to show that they have reasonable prevention procedures in place, and this strategy sets the tone from the top in relation to fraud prevention. Now, the changes to the strategy are to make it much clearer to those who need to read it and includes a dedicated fraud response plan. Now, previously, our response, we've always had a response plan, as it were, incorporated in the document, but it was in the main body, which made it very long and wasn't abundantly clear. I mean, a lot of the changes this year are because previously it was a very long 15-page, very wordy document. We've decided to kind of reframe it, make things appendices because we're expecting staff to read it. So I've kind of looked at it and tried to make it a bit more readable now. This is an opportunity for the committee to provide any feedback before it goes to Cabinet for final approval and adoption, and I'm happy to take any questions members may have.
Cool. Thank you, James. Any questions or observations? I mean, I think there's
Thank you, Chair. Sorry, James, it's great. I just wanted to ask if we could get a little bit more information regarding new or emerging risks that come in, what are detection methodologies, how we're adapting when we do find that new and emerging ones are coming up. So just a little bit more information regarding that. But yeah, thank you.
Yeah, obviously we carry out the fraud risk assessments and the committee receives receives that annually. That will be on the committee's agenda in February off the top of my head. Obviously, if we do pick up on any new and emerging risks, we try and cover those off in the assessments and they'll be factored into the risk register.
Cool. Thank you. Are we all happy to endorse the strategy? Yeah, it's really well written. Thank you. The next item is the annual report of the Finance and Audit Committee, which is me. So I think thank you to officers who drafted quite a lot of the report and the foreword, where I reflected the thanks for the committee, but also just highlighted that we as a committee looked at 3 years of accounts last year on top of our normal business, which was itself fairly considerable. So I drew attention to that, but also wanted to reflect for, I guess, for the minutes tonight that the comments that I added around commending the finance team for the work over the year, not just on the 3 years of accounts, but also the presentations that they gave to committee, and also thanking the external speakers. Jasmine's here, and obviously Paris isn't here tonight, but thanking them for all the work they've done for the committee and the guidance they've given us, as well as the papers, which, although long, are very digestible and very well explained. So I just wanted to ask if everyone's happy to endorse the report and then agree to present it to full council. Yep. Great.
Can I say it's a splendid report, sir?
Thank you, Lee. I'm sure the foreword was your favourite bit, wasn't it?
Through you, Chair, can I second that across the floor? Thank you.
Cool. It's wonderful. Thank you both. Okay, on to item 15, which is the Local Government and Social Care Ombudsman Annual Review Letter, which Pat will present.
Thank you, Chair. I'll keep this brief. The Local Government and Social Care Ombudsman publishes an annual review letter for each authority, summarising the complaints and inquiries they've dealt with over the past year, along with the action taken. And Gravesham Borough Council's annual letter is attached to Appendix 1. For the year 24-25, the Ombudsman received a total of 21 complaints or inquiries about Gravesham Borough Council, and they are detailed in Appendix 2 on page 219. Of the 21 that the Ombudsman received, they dealt with 20 of them within the financial year. 10 of them were decided were not for the Ombudsman. They called it premature decision, and what that means is that it needed to go through the council's complaints process first of all before it went to the Ombudsman. So it's referred back to the council for them to review that complaint, to respond to that complaint through the existing process. 10 were assessed and were closed. Now they could be, for instance, things where the Ombudsman is not the place for them to complain to. There may be another court or a tribunal to go through, and so the Ombudsman will not get involved in those particular cases. I think that the powerful figure at the end was that they decided that out of those 20 cases, none of them needed to be investigated, which is quite a strong performance, I would suggest. But obviously we use these complaints as learning mechanisms as well. So I'm happy to take any questions. Thank you.
Thank you. Any questions? Just actually one from me, actually, Pat. I think the fact that no number upheld was a brilliant result. I just wanted to ask, how does this compare to other similar councils?
Yeah, it's a good question, and particularly the similar councils part. So compared to other districts, neighbouring districts, etc., the average is, I'm going to use the actual figures here, 1.1 cases per 100,000 population. So that's cases that are upheld. So we've had none that were even needed to be investigated. So we are quite ahead of the game on that. The averages on the number of investigations that become upheld, it's about a third tend to be upheld. So again, we're in a fairly strong position when compared to similar district councils.
That's lovely. Thank you, Pat. Any further questions? No, that item was for noting, so that brings us to the end of the scheduled business. The only further item is any other business. None has been brought to my attention, but happy to open to the floor if there is any. No. Okay. Thank you, everyone. So 8:32, I'll bring the meeting to a close. Thank you all.